Okay. Hi, everyone. This is Raj Rudra. I'm an IT guy and a real estate investor from Tampa Bay, Florida. Today, topic is creative financing and how she transitioned from single family to multifamily space. I'll introduce Leka Devatha first, and we'll introduce JT Capital team, and we'll go through the webinar, and then we'll have a Q&A session at the end. So let me start introducing myself, Leka first, and then we'll turn it to the JT team, and then we'll go with the flow. Okay, Leka is a real estate broker and a realtor in Seattle, Washington, and she moved from India 14 years back. She worked in the IT corporate industry at Northstorm, and after that, because of her passion, she left the job and moved to real estate, and she started Rehabit Homes, which is kind of a residential development, mainly focusing on. And then she did hundreds of transactions, developing real estate over 50 millions. And she also featured on several podcasts, including Bigger Pockets, Business Insider, and everything. And she also contributed on a recent published book, The Only Woman in the Room. As a part of giving back, she does virtual real estate meetings every month. It's called Real Estate at Work. I think that's all from my side. Leka, you want to add anything? I know I didn't cover your personal side. Maybe you can add those things that will be useful for the audience here.
Yeah, so thank you, first of all, to JT Capital and Raj for having me on today. Like Raj mentioned, I'm a real estate broker, but more importantly, I'm a real estate investor and developer. And I've been doing this for about 8 years now in the Seattle, Washington area. On the personal side, I do have 2 kids, 8 and 5. One is an angel, the other is a demon. But it's they just keep life interesting. My husband is a software engineer, and so it's good to have like a little real estate and a little tech in the family. I was born in India, in Bangalore, moved here about 14 years ago, and have lived in Seattle since.
Oh, that's great. Next is Pooja and Sapan. Can you introduce yourself and also cover for Rohan, since he didn't join this call today because of his other prior commitments? Please, Pooja.
Hi, my name is Pooja. Prior to joining in real estate, my background was in strategy, management and consulting with Deloitte. And then post business school, I went back to Deloitte for a year, and my passion was in marketing. So I transferred to different careers and worked at the Hershey Company for about 5 years until I had my first daughter. And at that point, we were also moving. So it was a good turning point in my career. And I was talking to Sepan, who's also my brother, and he mentioned, why don't you come work with us? We need somebody to do some of the marketing. And, I was always interested in real estate. So I thought, well, now or never, right? So I made the move into real estate, and I thought if I don't like it, I can always go back to corporate America, and I am still here. So in real estate, I, with JT Capital, I wear many hats, but I really focus more on the asset management as well as the marketing and operations.
Okay, Sapan, go ahead, please.
Yeah, thanks, Raj. Hey guys, I'm a partner also here at JT Capital. I focus on the acquisitions and disposition side of our business. Got roughly around 600 million under management currently. I've been doing this for probably about 15 years now. Also, started originally in consulting, strategy and operations side, where a number of my clients are in commercial real estate, where some of them are public sector cities, overseeing their housing authority, before segueing into the private sector realm.
Okay, thanks. And then Pooja, you want to add anything for Rohan?
Yeah, so Rohan is our third partner. His background has been in tech and VC firms, so he brings a nice complement to Sepin and I, who have like the backgrounds in finance and marketing and management consulting. He is from San Francisco, and I'm really excited. Last year, he moved 3 minutes down the road from me in Austin, Texas, and so now we're just convincing my brother to leave California, which is an awesome place that he lives in, to come join us in Austin. But yeah, so Rohan, he focuses kind of on the strategy, investor relations side of the with JT Capital.
Okay. With that, first I'll start about the agenda of the meeting and then we'll proceed. So Leka is going to present about creative financing and transition from single family to multifamily space. She's going to go over that. So in the meantime, I have a couple of housekeeping tips. So first thing is introduce yourself in the chat, where you are from. And if you have any questions, please put it. We may not answer in the middle of the session, but we'll do it at the end of the session. Myself and Pooja will drive those questions. And if there is something we cannot answer on this call, please email us and we'll get back to you with the appropriate answer. And other thing is, before proceeding, we are not CPAs, financial advisors, or attorneys. So whatever we tell is purely educational because it's based on individual experience. So you need to make sure when you are investing, you consult with your advisors and take the with a grain of salt and do your own due diligence and invest. So we're not asking you giving any investment advice, but we're just telling our experiences. So with that, Leka, you can share your screen and then we'll proceed from there.
Sounds good. All right, you guys can see? Awesome. So I wanted to, if you guys made it to the first presentation, I spoke about some creative exit strategies. This one is all about how I finance my deals and how I ended up making the switch from single family to multifamily. So just going through this, okay, let's see. As I mentioned earlier, I'm a real estate developer, investor, broker, and I'm in the greater Seattle area. If you weren't here last time, then this is just my journey. I moved here in 2006, started investing in real estate in my own backyard in 2014. Since then, I have done over 50 single family flips, own about 30 doors local to Seattle. I am part of our hard money lending company. I'm on the board of advisors. We started in 2017. And we basically, the company has grown like tenfold, and it really warms my heart to see their growth. And in 2017, I also started building my rental portfolio, became a licensed broker. And then the following year, I started a meetup group, mainly to give back and, for education and to mainly connect people, bring amazing speakers and connect people. Because I just remember starting out and my network was what really grew my business. And I wanted to kind of give back and create that same kind of community. Raj, you can hear me?
Oh, yeah, well, we can hear you fine. Yeah.
Okay. So then coming into 2020, was when I first bought like a multifamily building. It was a triplex, and we'll talk about that a little bit. And now moving on, I'm buying commercial buildings, helping syndicate deals, and really learning this new asset class. And it's just been a lot of fun. And what real estate has kind of done for me is give me more than, I think, financial freedom, time freedom to really travel, spend time with my kids, and enjoy life a little bit more than I did when I was in corporate world. Okay, so moving on, I want to talk about my market first. And the reason I use a lot of creative financing strategies So these are the three main counties that I buy homes in: Pierce, Snohomish, and King. And just to put things in perspective, 8 years ago when I started, the median sales price in Pierce County was about 100,000. In Snohomish County was, I would say, 150, and King was closer to 400. And this is really how it's grown. And it's crazy what our market is doing, because this is also taking into account the overall county, but there's like sub counties, especially the counties that I work in that and I buy property in, which, you know, the median sales price is more like 1.1 million. So it's kind of crazy what has happened to our market, and it just continues to go up because of lack of inventory, interest rates, and then we also have 40,000 people moving to the city every week. So it's kind of a crazy time in our market. So some common ways of financing a deal, right, are your conventional bank loans, a portfolio loan, and a hard money loan. And I use, out of the three, I use a hard money loan to buy my short-term properties, which is my fix and flip. So I buy it, I fix it up really quick, and then we sell it. When we sell it, we pay back the hard money lender, and that's really our exit strategy. If I was doing like a longer term hold, like a 25, excuse me, 25, or even like a 10-year hold, I would do what's called a portfolio loan, where it doesn't really go on my record as having the 10 conventional loans. I could do as many of these as I want, but of course I'm paying a much higher rate of interest. And then if I wanted to buy a more turnkey property, then I would do a conventional bank loan. I typically use a conventional loan to refinance my properties. So once it's like stabilized, that's when I go out and get a conventional loan. And this is for under 4 units, obviously. Okay, so then, so here are some creative ways of structuring my deals by leveraging OPM or other people's money. So I have in my network a lot of people that either have the finances that don't know anything about real estate or how to invest in real estate. And I kind of give them that window of opportunity because a lot of my network includes techies. Or, there's other real estate investors that sometimes don't have the best deal. And then I find an amazing deal and I'm like, hey, I need a partner on this. And so we JV partner. So that's like a joint venture partnership. I've also used another technique called seller financing, where the seller, instead of just selling it outright to me and I get a loan on the property, I'm able to use them as leverage. So I use the seller to finance a property, but I give them a pretty solid interest rate. That way, if the seller doesn't want all the cash at one time, then they can just, continue to accumulate wealth even after selling their property by giving it to me for a certain interest rate and just, cashing in on the interest, maybe even a higher down payment. And this is a super popular strategy for a lot of distressed properties, because sometimes like the seller, is mostly mature. So they've paid off their equity, or they have a lot of equity and they paid off their debt. So they're just sitting on a pile of cash and they don't need all that money. And they'd rather get a monthly paycheck off the interest rather than just getting a pile of money that they don't know what to do with. And so seller financing is just a great little technique. Second lien is basically another word for bridge financing. So a lot of times, because of how expensive my market is, and if I'm doing like 7 deals, I could be into my deals for $7 million. And if I do, even if I did go and get like I don't know, portfolio loan or a bridge loan or a hard money loan, there's still the acquisition cost or a small portion of the rehab that needs to be financed. And that's when I get a second lien partner, where they basically finance that gap. and then they get interest or they get profit. And we'll kind of go through the numbers on what that second lien does. And then, of course, the last one is syndication, where you can raise money from a bunch of people and you can give them back a preferred rate of return, some equity. I mean, there's like a million ways to structure those. And Pooja and Sapan are really literally the bosses of that. So talk to them about it. Okay, next. So this is a deal like I want to talk about. This is one that we JV partnered on. This was an 1890s home. I literally took everything down to the studs and I reconstructed. So it was a really cool project. The reason that I brought on a partner was just the cost of this project was $1,050,000. And I was at that time doing 6 other projects, I want to say. And I was like, well, I don't really need another project, but I got this amazing deal in the most gorgeous neighborhood in Seattle called Wallingford. And I also at the same time had a mentee that wanted to learn from me how I bought the deal, how I fixed it up, how I ran my contractor crew, and then ultimately how we exited the property. And so he was like, hey, I have some cash, which, I don't mind doing a deal with you on. And so he partnered with me. And then in turn, he got to see exactly how I ran the deal. This was also a really good project for him to partner on because we ran into so many issues. Just the rehab cost on this was $200,000. And when you do such a large scale remodel, like there's a lot of learning that goes in there. So it was really cool for him to kind of see the process. The whole time on this was 9 months and we paid him $30,000 in profit, which was pretty amazing for him. Because he literally was just, he had this money sitting in a bank account, not doing anything. So we killed 2 birds with 1 stone, where we educated and also were able to pull out a profit. This was a house that we did, that we used seller financing on. And what was cool, hold on 1 second. Yeah, so what was cool about this house is the seller wanted to sell this to us for about $550,000. And he said, hey, I'll finance $495,000 out of the $550,000, which at 4.5 or 5% interest, which is amazing. Because if you went and got a hard money loan on this, it would have cost us about 8% and 2 points. Also, this was at a really crappy time in the market. So it helped to have that cheaper financing, because otherwise we would just basically lose out on a bunch of money because of just financing costs, which is not fun. So then what we did over here was this project took us about 6 months and we paid him out an interest of $12,375. So in addition to paying him $550,000 for the house, he also made that additional almost $15,000 just by carrying that note for us. So seller financing is a pretty powerful tool, especially if you're buying a larger asset. So this is a project that we used gap financing on, and it was cool because I just needed a very low amount of money, and we again, this was a larger remodel. I think we spent $150,000 on this. So my investor just lent us $100,000, and he again learned in the process, how we acquired this deal, what we did, how we got permits, how we reconstructed. Our whole time on this was 12 months. We were dealing with a really tough city, and so it just took a very long time for construction. And we paid him $10,000 in interest. And again, this guy that invested in this property is a software engineer, and he would have otherwise just sat on the money in the bank account, not even doing anything for him. So it's cool that he was able to utilize this strategy and we were able to utilize his financing. This is one of my favorite ways to partner. And this is when I partnered with my general contractor. So I was actually traveling a bunch in 2019. I was gone for about, I want to say 4 months, traveling to India, around Asia. And just before I left on my trip, I found this amazing deal. And my contractor had been bugging me to like learn the process because he knew construction, but he doesn't know how to source these kinds of deals and he doesn't know how to list it on the market. So we decided, okay, let's partner with him and kind of see what happens. That was a really good strategy because he was so vested in this deal that he was just throwing free stuff all the time and be like, no, I think we should put some cedar siding on this just for the fun of it, or put metal railings because I think it'll increase the value of the home. And it was really cool because it did. We listed this house for I want to say about 900K and it sold for $1,050,000. And in 6 months, he made 30K in addition to construction costs. Which when I do partner with my general contractors, I do not ask them to drop the price of their labor or their material because this is just supposed to be gravy on top of all of that. So it's just like different ways of financing and structuring your deals. Of course, each time you do this, you have to drop a promissory note. Depending on the investor, you'd have to add them to your deed of trust. And you need to have a good attorney to set all that up. So just make sure that you are super protected when you're doing a partnership, especially. Also, I do not recommend ever partnering with someone that has as much say in the project as you. Most of my partners, I want to say 99% of the time, are silent partners. So they don't get to have a say on what I do with my project. Of course, unless it's my general contractor, he gets to have a say. But otherwise, they're all silent partners and I get to make all the big decisions. All right, so let's talk about my foray into multifamily. So I had been in the business about 6 years. Sorry?
Oh, no, you can continue, Leka.
Okay.
I think, yeah, there was one question, probably I will ask this because it's regarding one of your projects. He said, how is the profit paid out at 30K, a good return on $1 million deal? Maybe can you elaborate how that deal was done? Maybe use most of it for financing, or
how is profit paid out of 30K a good return on $1 million deal? No.
Is it 3%? He's asking, yeah.
Oh, no. So the investor only brought in 150K. So it's a 30K profit on 150K in 9 months.
Oh, okay. That's great. Yeah.
Yeah.
Okay. Yeah.
My profit on the deal was a lot more. It was like 170K. So most of my exactly. Most of my $1 million flips yield about a 200K return or profit at the end, at the exit, because they're so expensive that I won't touch a deal unless there's a really good spread. And the reason also that I'm able to create a spread is because of how much a remodel that these homes take. Like my rehab costs are like 180 to 250, and a lot of people shy away from those deals. A lot of fix and flippers look for those cosmetic deals, and I look for the more like full gut remodels.
Yeah, like deep value. But what you are trying to do is you are going to mostly finance, but your out of pocket will be very less and your profit will be more. It's that kind of model, no?
Right. So I still carry all the holding costs. Now, also the holding costs on these deals are like $6-7 grand a month, which I do. I take care of myself because I like to have skin in the game. But at the same time, like if the hard money lender is only financing 85% of the acquisition and maybe 100% of the rehab, then that 15% is what comes from our partners.
Oh, okay. That's great. Yeah. I think that clarifies. Yeah. Okay.
Yeah. So I hope that makes sense.
Yeah, it makes sense. Yeah. He responded saying that it's great. Yeah. If you can put your name, that's great. No, I see triple N, but yeah. Okay. Yeah. Leka, you can continue. Yeah.
Okay. So, okay, let's see here. So, in 2019, I ended up selling a condo in actually pretty close to where I live, and I had a lot of equity in this deal. And so what happened was I used that money to 1031 into my first triplex. And this triplex is right next, and I'll show you. Okay, so this triplex is literally right next to Amazon, Expedia, all these like really cool health companies, tech companies. And so the location is fantastic. Now I bought this for 1.2 million. It's a triplex. In most other cities, you can pretty much buy a 20 or 30 unit apartment building for the same amount of money. And this triplex is not even like it was move-in ready. It was actually quite distressed. And so what I did was I bought it, I fixed it up, like I put about 25K. I fixed it up and I made it more rentable. And then it's been rented out since 2020. And even through COVID, it never sat empty. Our tenants paid every single month. But here's the catch. I have put in about $1,000 a month into this building because even though it's been rented out, we had to rent it for really low rents because of the condition of the property. And what I did was I ended up going out and getting permits to remodel the entire building. And those permits have taken us about 13 months to get because of COVID and how inundated the city is with all these construction permits. And so we've just held it till we got our permits. We're starting construction in about 3 weeks on this property. But what's cool is this property has appreciated already and is now worth 1.7.
Oh, okay, that's great. Yeah.
A year and a half. And that's because of location. So, okay. So
I was just going to ask you, I was going to type it, but I'll ask you here. Did you build in, do you build in buffers for permit time? Because a lot of times, that your hands are tied, it's dependent on the city. So in this case, I guess it worked out well because you had the appreciation, right? But we also didn't know COVID was going to happen and everything was going to be delayed. So how was that like?
Yeah. So I do build in a buffer for my short-term properties because this was a long-term buy and hold. I knew I was going to keep this property for 5-10 years. And so it didn't matter when we were going to get the permits because either way, it was just going to be rented out. And I didn't mind not having cash flow as long as I had appreciation. That's the other thing is my portfolio is full of properties that are either cash flowing with a little appreciation or appreciating a ton with not that much cash flow or negligent cash flow. And so that kind of helps balance out my portfolio. So this was one where it was negative cash flow, but massive appreciation. So honestly, it didn't matter when we were going to get permits. What did matter was that our tenants were in the property till I got my permits. So just as of a couple of weeks ago, the building is now completely vacant. We have the permit to redo the basement. We're still working on the permit for the other 2 floors. And so we should start construction in a couple of weeks.
Yeah.
So yeah, go ahead.
Yeah, that's great, Leka. So from this, what I can see is every deal you're doing, you're looking for a forced appreciation on different other concepts, trying to increase the value of the property, what additions you can do, and how you can improve the cash flow. So you're applying a lot of strategies at once. I can see that. So is that what you mainly look for when you're looking for a deal?
It's because of my background in residential remodeling that I just cannot buy a move-in ready property. It's just it's like I'm allergic to them. Okay. For me, the more distressed, the better, because then I can fix it up to my liking and, just really make it like tenant proof and also raise equity. And I'll talk about another strategy that I'm a huge fan of, that I buy most of my rentals through this strategy. And that's the only way I can even afford to buy rentals in my market because they're so expensive at almost $400 a door for a distressed property. It's an expensive market. So on this project, the layout was a triplex. We're now going to convert that into a 5-plex. The current rents were like 60,000 for the year. Our future potential is 117K. Our rehab cost is 300 grand. So, it's a large remodel. We're pretty much going to do everything from siding, roof, sewer repair to like obviously fix up all of the interiors. The current valuation is 1.7. Once it's been fixed up, we're going to look at like 2.2, maybe even higher, but 2.2 is just on the lower end. Okay, so this is a project that I bought. This is another fourplex that I bought in 2020. So last September. And what's cool about this is it's a fourplex, but it's a townhome style fourplex. So each of those units are like an up down. They have a really nice kitchen, a living room, 2 bedrooms, and 2.5 baths with its own laundry in each room. So this is really my favorite strategy. It's called the BRRRR strategy, and it basically means buy, rehab, rent, and refinance. So you're buying at a certain price, you're rehabbing the property, and then you rent the property, right? And that increases the value of the property tremendously. At that point, you refinance and you can actually pull all your cash up and use your cash to repeat. Okay, so I bought this fourplex in a submarket of Seattle called Auburn, Washington, and it was vacant and it was distressed. And I bought it for $130 a square foot. And the average price per square foot in the area is more like $240. Now we rebuilt this, and because I have a solid crew, I was able to put in like $31 a square foot to fix it up. So we're still way under the average price per square foot. The reason I got this property was because a broker in my office was, going out and finding off-market listings, and he spoke to this one seller, and she was like, oh, I have this deal that I just want to get rid of because she lived in Seattle, she moved to San Francisco, and she didn't want to deal with this. And so she's like, look, I just don't mind like getting rid of this. I don't want to deal with my tenants, I don't want to deal with the property, everything was breaking every day. And so she was like, I just want to get rid of it. So that broker didn't know who else to call. He was like, I think Leka deals with distressed property. And then he called me and he's like, do you want it? I got this email from him and I got a phone call. I looked at it. I was like, wow, this is a really good deal. And in like 10 minutes, I was driving to meet him. We saw the property. I went there with my contractor. We saw the property and I was like, Adam, I'm going to buy this. And I gave him an earnest money check. One of the best deals I've ever bought. It is now renting for $1,780 a unit. And we just cash out refinanced out of the property, and the appraisal came in at 1.25. So we got back $850K in cash, paid off all of our debt, and we still made some money. So the bank basically paid us to to own this property and cash flow in it. And also, it's such an appreciating market that we're really lucky to have found this deal. But again, it's like it all depends on your strategy and what you are able to do with an individual deal, because not everyone could have pulled this off. I just happen to have a great crew that understands the way I want my units fixed up. They understand how I want things constructed. So it just worked.
Yeah, I think you build a team where you can use the resources and their leverage, to understand this game better, and you're able to do all this. Yeah. So hopefully people should get to that stage. Yeah.
Yes, for sure. Or partner with other amazing operators.
Sure.
Okay, so this is super exciting. I'm doing another 1031 this year, and I was like literally analyzing properties in every market. I looked at, I want to say about 60 properties, triple net deals in 60 different locations. And like overnight, I was learning about these different cities and the MSAs and like, the growth and like all of that. And I ended up buying a deal, which I'm closing on next week, right in my backyard again. And it's like I look all over the country and then I keep ending up buying deals right here in my city. So next time I'll know. But this is a really cool building. This building was built in like the early 1900s. And it's a 7-unit office building. And it's in a, like if you're from Seattle or have been to Seattle, you've probably seen South Lake Union. It's one of the hottest neighborhoods in the city. It's also called Amazon City because all of Amazon spread across South Lake Union. My neighbors, so this property is on a street called Dexter, and my neighbors are Facebook, Amazon, and Apple. So it's really hard to come by real estate on this amazing street. And so just the value of land is it's just expensive. I'm buying this building again. It's distressed just the way I like it, and it's vacant. And so I'm buying the building for 1.95 million, and it'll probably be worth about 3 million once it's been remodeled and stabilized, which should be in the next year. What is also like challenging and yet exciting is the fact that we have 21% vacancy in Seattle right now for office buildings. And so I am buying this at like the highest vacancy rate in the last like few years. And it's about to drop to 10% as these tech companies start having people go back. And this is a perfect building for someone that's wanting to start a startup or like, a smaller company. Like a lot of mortgage companies have been inquiring about the property. We haven't even closed yet, but as you can see, we already have a for lease sign. And so we're getting a lot of attention from different companies. That top floor, those views you see of the water and the buildings, that's the view from that top floor of that building.
Oh, okay. That's great. Yeah.
It's a pretty cool building. When I first heard about this building, like I couldn't sleep. I was like, I want this building so bad because it's also part of the Seattle skyline. Like it's amazing to own a building that is part of the skyline. So that is my foray into office, and we'll see how that goes. Maybe we'll do another one of these and I can tell you how miserably I did or how well I did. I don't know. All right, so going in to 2021 and beyond, I am super excited about multifamily syndication. I am actively looking for a multifamily deal. Again, I looked all over the country and I was like, the best place to be is Seattle, Washington. Just because I'm boots on the ground, I have crews here, I know my market, I know what different times of the year does to my market. I'm so like involved in Seattle real estate that it just makes sense to be here. Obviously, I can't buy a 150 unit apartment building, so it'll be like more like a 20 unit, but that's what I'm gonna do. So as Raj mentioned, I do have a meetup group. It's called Real Estate at Work. We're on meetup.com, and we bring on, it's completely free and it is 100% as education based. We bring on amazing speakers every month. So if you're interested, do join. And you can connect with me on LinkedIn or Instagram, and that's my website.
Okay. Yeah. Thank you so much, Leka. And, it's really amazing. You cover a lot of topics. And then I think a lot of people will have questions. Some might not be on this call. Maybe, is there any email they can reach out to you, or is it at Rehabit Homes, Leka at Rehabit Homes or something like that? They can email you if needed.
Yeah. If you want to email, it's leka@rehabithomes.com. You can also reach me through my website. Just go and email me that way. That's fine too.
Okay. And then we'll start the Q&A. Some of the questions are from the chat, and then I will ask additional questions. So Pooja, you want to start with the first question from Ajis?
Yeah. So one of the first questions is from Aziz. How do you structure your entities for asset protection and tax advantages?
By hiring a really good asset protection company. We use Anderson Advisors to build out all our structures. Each of our rentals are in its own LLCs, and then they all feed into a land trust, I want to say. But it's complicated. And with the number of deals we buy, and we buy them in different entities, and we quitclaim deed them. And so it's just a hot mess that we don't want to deal with. We also have a full CPA and bookkeeping team that does all of our taxes and accounting, because again, I just closed on a house in Sandy Point LLC, but that's because I bought it from a wholesaler that I already had it under contract in that LLC, but that has to change to Rehab at Homes. And so we quitclaim deed that. So it's like a tax person's nightmare. And we worked a lot with our tax CPA to kind of figure this out.
Oh, okay, that's great. So the next questions are I'll ask, because if someone new to start with this, so should you buy with a LLC or on their own name, or how they get these financing? I know you are saying, okay, you can do creative financing with the different structures, but are they able to get it on LLC for the first time, or what's the other? I mean, do you have any recommendations, like where they can reach out to the companies that will lend for LLCs, things like that? I mean, mainly I'm asking from anyone who wants to do it themselves, how they can follow your methodology and do it. Yeah.
Yeah, I recommend always opening an LLC. We did an S corp because we did short-term holds. So with all short-term holds, you want to do it in an S corp because of the way it's taxed. An LLC is typically for long-term holds. So then if we're like buying a property, we're fixing it up, flipping it, it goes into our S corp. If we're buying a property for rental purposes, then it goes into its own LLC. So I highly recommend doing that. It just offers a layer of protection between you and your asset. Suppose your tenant falls in one of your rental properties and breaks her hip, and she can come back and sue you for everything you own if the property is in your personal name. So don't do that. Just add lots of protection between you and your personal assets, and then your investment properties.
Okay. Yeah. The next question is about the financing. So if it is on an LLC, how the interest rate and where they can get these? Do you recommend any particular companies, or what is your approach for that?
So financing what? Because if it's a long-term hold, then a lot of portfolio lenders and even conventional banks can finance your LLC or your S corp, as long as you have all your bylaws and all your asset documents in order. If it is a short-term hold and you're just going to a hard money lenders are very savvy with LLCs and how to basically lend to them. So I've had no problem with any of these structures. Sometimes it's just that if it's in your own personal name, then they have to underwrite you as a human being. So it's just a lot of underwriting as opposed to just having it be in its own LLC.
Okay. And this question is about, like, if somebody wants to partner with you, are you going to allow in future, or how they need to approach you? I'm just asking for any audience, if they're interested in, investing in your deals or something like that.
Yeah, if you go on my website, there's a form that you can actually fill out, and that basically says, hey, I want to partner. I have so much funds that I want to invest in one of your deals, or like in a syndication. So just go ahead and fill out that form, and that way I know to keep you posted if I do have a deal that I'm looking for a partner on. Typically, I don't like partnering and doing JV partnerships on deals unless I know you really well. So, and we've met a few times, but if it's a syndication that you want to, invest in, one of my syndications or syndications that I'm raising capital for, then yes, happy to do that. Also, I'm a huge believer in education. So if you would find value investing with me in order to be educated along the way, then that's a huge bonus for both of us.
Oh, okay. And you also talked about mentorship now. So if somebody, can you mentor them by offering any services at a particular cost, or if they want to join your course or something like that, do you offer that currently, Leka? Or
I don't have a course that I teach or any of that. I am just, buried in my own projects to to do that. But if they are like partners on a deal or investing with me, then I'm happy to show them the process. Like there's a 23-year-old that has reached out to me after he watched my Bigger Pockets podcast, and he's just been in touch with me for the last year, and he's been wanting to do a deal. And so we just closed on that house this week, and he's he's the partner on that because he wants to learn. And so he was like, I'll finance the gap and I want to just learn. So we just did our walkthrough like a couple hours ago, and he came for that, and he was just like, my mind is blown. Like, it's so cool what you guys do and how you design all these homes. So it's exciting.
Yeah. And what is your advice or any tip for the, any guys who wants to start up with real estate, like same from IT background or some corporate, they want to venture into it. What do you think, like, what are the first steps they should start with, and then how they should approach investing into real estate?
I would say really like go out and get a good understanding on the different investment strategies out there, the different asset classes. Once you know that, then you probably are in a much better position to go invest in the asset class that really excites you. Another thing I'll say is just go out and do it. Go find amazing people to partner with. Go find your tribe, and then just get started, because a lot of people that I run into are stuck in that analysis paralysis phase. And it goes like, I go through 3 years and then I bump into them and I'm like, hey, what are you doing? And they're like, oh, we're still reading books. We're still watching podcasts. And I'm like, nothing can teach you like experience can. So I would say just go out and do it.
Yeah, just do it. Okay, that's great. And Pooja, do you have any other questions or anything you want to ask?
I have one question, and this is similar to multifamily. So I'm curious how it's like for you right now in single family, and then kind of entering into the multifamily space. I know everybody's kind of talking about it. Lumber prices, I think, are finally decreasing, but there's a supply shortage and there's a labor shortage. So how are you managing through that?
Oh my God. Okay, so I just walked my flip. This is not the project I'm buying, but it's a project that I'm just finishing up. We have one wall where we can't find paint because the paint stores have run out of paint. Our flooring just went in, and my contractor cannot find ram boards to cover the flooring with because they are out of ram boards in the store. So yes, supply shortage is a huge problem, a huge challenge. He built out a deck for me last week, and that deck would typically cost me $1,000, and today it's costing me $4,500. And this is not even with railing. Like, I have to put boxwood for railing because it's so expensive, and things are just so like it's just back ordered, and then there's so much construction that people can't even keep. Like, I wanted to put a glass shower door in, and we can't get it for the next 4 to 6 weeks. So it's a real thing. Luckily for me, my my contractor has an amazing crew, so labor shortage is not a thing. But I do see that, like, if I want an electrician or a different subcontractor for one of my other projects, then everything is super expensive, nobody's available. So I see that it's the same as multifamily.
Okay, yeah. Thanks, Leka. I think I don't have any additional questions, but if someone has, they can put it on the chat or they can reach out to us after this call. So I'll stop recording at this stage, and then if there's anything, final comments you want to add, you can add it here. So 1 second, I'll stop the recording.